What's going on, traders? Hope everybody's having a great weekend. My name is Shark. Thank you so much for joining me on this video where we do some analysis and prep for the upcoming trading week on the E-mini S&P futures as well as the NASDAQ 100 futures NQ. Reminder that this video will be just for educational and entertainment purposes. In no way should any of it be misconstrued as financial advice, but of course, we like to go ahead and prepare every week before the market opens, and that way we have a straight game plan and we know what to look for in the upcoming week's worth of trading. And we do have a very action-packed week here ahead of us coming into the end of October. Let's take a look at the economic calendar and the earnings calendar coming up. Earnings season now really getting into full swing, so we're going to definitely look at that calendar as well and point out any notable companies reporting. So let's get into that. We'll start off with the earnings calendar here, and definitely some notable names. Let's go ahead, and nothing too much on Monday, but Tuesday starts to kick off some interesting names with PayPal and UPS, JetBlue, and then Wednesday, here's where it really starts to get hot and heavy after the market close. Meta, Microsoft, Google, Chipotle, Starbucks, all coming in heavy hitters. Boeing as well on Wednesday before the market opens, though. That will definitely be interesting to pay attention to. Thursday in the morning, not too much Eli Lilly, Merck, some of the pharmaceutical companies. But then on Thursday after the close, Amazon, big name. Apple, big name. Coinbase, Reddit, Western Digital, and a few other lower tech names. But Amazon, Apple, of course, are the big heavy hitters on Thursday. And Friday, we have some energy names coming in. Not too much there for us on Friday. But, of course, the most important things here are going to be Meta on Wednesday, Microsoft, Alphabet, Google, and Amazon, and Apple. So there you have it for a big week of earnings. Okay, so as far as the economic calendar is concerned, big week here ahead. Not too much going on Monday and Tuesday, but Wednesday here we have FOMC rate decision with Powell speaking at 2:30. So 2 o'clock, 2:30, everyone will be watching to see what the Fed is going to do. Do we get another quarter point raise, or do they stay the same? Let's see what happens there. GDP coming out along with initial jobless claims on Thursday, the 30th, and then core PCE coming in 8:30 on Friday, the 31st, Halloween. So we will see what those numbers look like as well. But the big flag event, of course, is Wednesday, October 29th, with the Federal Reserve coming out with their decisions on the rates. Okay, so that's all I've got here for you on that front. Let's start to get into some of the charts here and see what we can take away from the weekly perspective here on the mini S&P futures. Excuse me, let me get a little sip of my water here. Okay. Now, you can see we kind of had this bull flag, right? Everyone was freaking out here when we pulled back down. And what did we say, right? We said, obviously, structurally, as long as we hold, right, these highs right here from back in the start of September, as well as these highs back here, really no issues, right, for the market overall. We pointed out a few scenarios here where we could just end up maybe even making a little bit deeper of a pull-in, and then from there getting that rocket shot up and over. We have not quite pulled in as much as I would have liked, but either way, still supported pretty much right here at the top of this previous flag breakout. And now we are just attempting, right, we getting over the bodies of the previous week's highs, just marginally over the last all-time high, which we did make a new all-time high here in last week. But I really would like to see a little bit more confirmation, 1 week maybe closing like this, build a little bit of a base here before I'd feel a little more confident about this being the next true higher high. It's very marginal, so I'm not 100% convinced here. There is obviously a lot of high impact events this week, so We don't know exactly how, of course, the market is going to react to that, but I'd be very cautious of a potential look above and fail here, and potentially coming back down towards the bottom part of this range now that we have put in on the market. So if we want to go ahead and create, balance range right now, let's see. But we have this right here, so let's see if this is actually true. We have that previous high that we'll be watching here from the weekly high of October 6th and September 29th, which is right around 66.80. And the next one was 68.12. And where do we close? 68.25. So just about 10 points over the all-time high was 68.41. Didn't spend too much time there, but we'll see there. So we do have a weekly balance there that I would like to pay attention to, and we'll go into our other chart right here, and we kind of have this area already kind of marked out for us. So we'll, and even if we pull back in, it's really as long as we hold the weekly highs from the 13th right around 67, 60, 67.55. As long as we hold this zone, really I have no issue. We can even do something like that. If we start to get underneath that 67.57 or even 55 for a little bit more confirmation, well, then watch out, we could sell back down a bit lower. But if we want to just put this on here, okay, let me get another, even from this weekly perspective, we can do now this for a weekly balance. Right. So that's kind of a range I might be looking for here to see. But as long as we hold that psychological, maybe just a little bit under, I don't really see, certainly the weekly low there right at 66.90. So 66.90, under 6,700, 66.90. I think that's really going to be where we could go ahead and retrace into these low 66.12. That'd be a possibility, or down really to match these equal lows once again. But we'll see. We could have the most bullish reaccumulation potentially for then a rocket ship up higher, or we see coming down underneath and then traversing down towards those previous equal lows. So let's see if we can actually build. The bulls want to see a base to build, right around like this, and then then we have a little bit more confirmation about that continuation to the upside. All right, so that's what I've got here on the weekly. Let's just pop out to the daily, see if there's anything else we can discern from this point of view right here. Okay, not really too much. I mean, maybe the only other thing I potentially would say is, we've kind of got a zone here. You can see the line, the low right here, and these highs. So we could even say this is a kind of the area that I would really want to pay attention to for the bulls, for a bigger shift in the market right here. This is what I would be watching right there. So let's take a look at our other chart. We already have that kind of marked off right here as well. So let's see if we can hold this area. As long as we do, I really don't see any issues. We could even come to here and pull off, right? Watch for a look below and fail, right? Something like that as well. Could be all potentialities for us. Okay. If I could erase these. There we go. All right, let's take a look at some day trading levels. Now I have to say here, actually, I'm going to probably post these on my Twitter because I have to wait till Sunday till I can get some data based off the Globex Open. But as it stands, I don't have much for this area where we are right now. You can see we had the CPI data, came up, down, open, rallied up, and we kind of just floated up here, fake out, can recapture the opening range, hang out. Then we finally broke it, right? And it was a real tricky day to trade on Friday. A lot of scalps. Maybe you got some. I mean, even on this dip, you really didn't get down to the opening range lows, which I believe you did get very close on the NAS, but not here on the SPOOs. Either way, really nothing, not a good day to trade there on Friday. But I guess I will say we can kind of use maybe that opening range. So if we can really get below 68.25, if we can make this real lower low, then we'll look for that move down to the lower part of the range. Stay above 68.25. Looking and look again, watch out for that look above and fail potentiality back into the previous opening range. We'll see what it turns out to on Monday, but otherwise we'd be looking for under 68.24 for trades back down into this area. Under 68.12, that's when things get a little bit interesting for me. 68.05, and then we come back down to 6800, 67.97. That will be the next big area where the bulls would need to defend. So would I be interested necessarily in buying here? Maybe. A lot of thin structure was created on this impulse move up. So if we were trading down, I probably wouldn't trade this. I'd be waiting for this lower low and then some type of a lower high to be put in, and then shooting for that 6800 area down here. I'd be way more interested in that potential long trade if we do come into that zone. So I would like that. Maybe we come in double bottom and then rocket ship off, and then do something like this, give us a little inverted head and shoulders. Who knows? But either way, I'd be way more interested in longs here versus here, or even you could, average into a long, take a starter at 68.05 and then add the next tranche or next three tranches down in this area, and then see what happens. But either way, I don't have too much here for ES because really didn't have too much movement overall. So, all right, let's get into NQ and see what we can take away from the tech sector, which has been really leading this rally. We've had a lot of divergences intraday with NQ and ES. It's been kind of annoying, but certainly a theme over the last 2 or 3 weeks. And that has definitely been a thorn in my side personally, but we do the best we can, and we just try to adapt, and that's all we can do, right? Okay, let's take a look at the weekly chart here on the NASDAQ. We talked about the NASDAQ leading this rally, and you can really see this push overall. Just ripping this market higher. And let me get rid of some of these. Okay. All right. So, technically speaking, I mean, the market really has no issues unless it gets underneath from, the weekly perspective. Unless we're under 24.90, I really don't have any issue here overall. What do the bulls need to hold right now? Well, it's a little tricky. We've got these equal highs, a little bit of a sweep right here from the week of the 28th. I'm going to go with the equal highs, and I'm going to say, actually, let me just... Okay, there we go. I'm going to say, as long as... I mean, the most bullish thing for us, for me, in my view. And, 25K also, too, is just, I have to, say offhand, even though we don't see a level here really supporting that. But 25K has really been a beast. The weekly highs from the 28th and October 13th now, I believe, are going to be important for the bulls. And you can see when I was mentioning about tech really leading this impulse move to the upside, you can see how much stronger this weekly quote-unquote flag is on NQ versus the ES, right? A much stronger push up here. The most bullish thing will be holding the previous high from the 6th. So I would say, see if I got it. It is 25,395, basically 400. Could say 25,400. So we are about 170 points over that. Let me zoom in for you. We hang out up here. Bullish reaccumulation, boom. Why wouldn't we see 2,600, right? At that point, we break under this area. Okay, then we'll look about coming back down. This is going to bother me. Why wouldn't we come back down into the 25,200s? Maybe a little bit lower. This high is 25,179, the weekly high from the 13th. But that would be my estimation if we break underneath. Now, would still be bullish consolidation if we end up hanging up in this range right here. About a decent range to trade. Of course, we're looking at the weekly here, so that would still be okay. Of course, we would look for the upside here. All right, this would be where I'd be getting, if we start seeing price hang out in this range, this is where I get a little bit more concerned, and certainly a break underneath this 25K, certainly, but 25, maybe underneath 2530 opens the door. 25,000, well, that's when things can get interesting. If that happens, I'd really be interested to looking at the lows down here to be potentially hit again, 24,800. So that could definitely be a possibility as well. So as long as we hold over 25,395, it's going to be pretty hard for the bulls, for the bears to really step back in. But here we do know now we have some levels where we know we want to be a little bit more cautious. Would I be interested in buying close to 25,200? Sure, that's definitely a potential area. This area I'd be way more interested in. Probably lines up close to that 6,700 on ES as far as for a better position long if you still are not on the train on this dip right here. So I would wait if you're not already involved in the market. We don't want to be buying necessarily the highest highs. Maybe you could, average into a trade over 3 or 4 sectional buys over if, we came down, something like that. But either way, this is what I was thinking. Okay, let's take a look at the daily chart now and see what we can take away from there. Okay, not much really that I feel like I would add in here. I mean, maybe the fact that we could end up sweeping. You can see the low from the 23rd here on the daily. was 24,937, so a little bit lower. But you can see what really happens when we break that 25,000. We do get quite a little bit of an impulse down lower. This one's 60 points. This one's a little bit more aggressive. But we get that more impulsive move. Running stops in that area. Running stops in that area. So that would definitely be important. A lot of bodies, a lot of traffic just in general in this area. So even if we break under this, I would still be just a little bit cautious because, we still have this whole zone in here, that potentially could show some support. But we need more data, to be quite frank with you, and to be able to see, what is really true here as far as areas that we want to look to be respected. So, this is one of the bad things about, or one of the challenging things, I should say, about trading all-time highs. We just don't have that historical data to really be able to have the best, put the edge really in our favor of levels that have been tested, that have proven themselves battle-worthy time and time again. So we don't know 100% there. So a little bit of caution just in that general area overall. But either way, I still do like this general zone here as a potential roadmap, and we will see up this week's upcoming trading. A lot of things obviously could happen this week with all the high impact earnings and of course Mr. Powell coming in. All right, let's look at some day trading levels now. Okay. A little tricky ones again here, but for me, looking at this, I'm going to go under. Okay, we have to, bulls, probably have to break over these previous highs, right? And I might as well, even though I don't have them on here, might as well mark them off. So over those previous highs, up and over, 25, 600, 25, 650 on deck. But under 25, 500 opens the door to attack these lows back down. 25, 425 potentiality. Breaking under that, we could come down here into 25, 400. We already talked about this level being a key area on the daily and weekly there. And then underneath that, 25, about 50 points lower or 40 points lower, 360. That's when things can get interesting, start to break under here. And we do have a little bit of highs, and we were talking about this. Now we're looking at this on the weekly. You can see here some of that area where we were talking about that high traffic zone. So it can get a little bit tricky in this area. We've got these equal highs as well. So I would, normally I don't like having the charts like this, but this whole area here can be a bit complicated. But I certainly would say, I think it's fair, underneath 25, 330, could see some more downside coming in, maybe 30 points lower into the 300s, and then potentially down into the 270s, 260s. Very, very tricky here. You can see it was stuck kind of in a balanced price range in this zone here. So it's a little bit complicated, but we'll see. Again, we're free floating up in this, in all-time highs is all, generally speaking, if we just kind of, look back, all this is still relatively new price action, right? So it's definitely something that we need to be aware of. We don't have that much information quite yet. I think 1 or 2 more weeks of trading up in this general range, to be able to really have some nice levels solidified. So I'm just throwing out a little bit of caution here as we float up in no man's land, so to speak. Okay, so let's take a look at some of the other data points that I enjoy looking at, help us make a little bit of a guesstimate or an informed decision about what the markets might be doing. Most of the markets, of course, are bullish here on Friday. with the positive CPI, SMH leading the way. Positive inflows last 2 days. Everything's looking overall positive inflow, one bad one, positive inflows really outnumbering here for our VOLD. You know, it was interesting. Thursday, we were very, very hot here on our ADD. Cooled off a little bit, never underneath the zero line, so nothing really to be concerned. Let's see how we open up on Monday, above or below. But overall, I would say we spent much more time above the zero line here, being in a positive territory for the buyers. Breadth on Friday, of course, all very strong. Qs almost 2, and the Dow sticking out almost 5 to 1 positive. So very strong market overall. Okay, let's take a look here. Any changes in the yield curve? Not really, didn't think it much. Okay, we had a little bit of VIX coming up, but didn't really get too interesting. And tried to hold, right? VIX would have needed to stay over this 22, the one-day VIX needed to stay over 21.50 for any kind of real action here. Back below 15, where we close 14.50. Let's see if we get back over 15 here. Then we can get a little bit more excited about volatility once again. Let's look at how many stocks are trading over their 50-period moving average in the S&P 500. Okay, well, we had a little bit of warning sign here. We never got down to any of the extremes where I'd be like, certainly buy, but we came down 34%. Now back over 50%, good sign. Marginally, though, 52%, but overall, good sign. The 200 SMA, the amount of stocks trading in the S&P over, never was a warning sign there at all. But 50 back over, so breadth certainly improving. New highs versus new lows. Let's see. All right, never got above the, never really got below the zero line in any meaningful way. What did we go down? Negative 23, negative 60, nothing back over the zero line. Strong there on the breadth. HYZ, the junk bonds back in lockstep with the market. Okay, no divergences there to be worried about. Breaking over this downtrend, looking good there. Taking a look at the one-day VIX. Oh gosh, you know, I want the volatility. This is one-day VIX back under 100, back under 103, 105. Nothing really there that's saying volatility is that strong. Look at VIX futures though. They were in backwardation, back in contango. Okay, everything is looking stronger there as well, or at least more positive. I have to double check. I wasn't able to check if we actually switched contracts yet. But either way, at least from the last thing that I see, we're back in contango. So that is good for allocating risk. Okay. Bonds still making their run overall. In lockstep here. And having been an issue, right? We were talking about that 91.83. Kind of looks like it hit 92 on the TLT, coming down a little bit, but no real issues. Bonds looking strong. Nice bounce on the 7-year, or 3 to 7 year, looking strong there. Yields are coming down here under the 50. We should continue to see a rise in bonds. Overall, let's look at the credit spreads and the bonds once again. Okay, right underneath the 50 here on the two bonds. This means, yeah, the rates looking to, yields looking to fall. Okay, credit spreads here, we're kind of flashing a little bit of warning, but now cooling off. Let's see what happens. This one certainly, what do we have here? The IEF and LQD. This one back on risk off. The HYG and the SHY, and HYG. This one's still saying, okay, watch out a little bit, but it's about to go back towards risk on. Right now, it's still basically kind of showing a slight risk off, but it's about to go back into risk on. So let's see. We're going to look at that maybe next week or midweek and see how this ends up right here. LQD corporate bonds just on a ripper. Let's see. Put call ratio, nothing interesting. VIX, boom to 28. couldn't hold over, right? We said our last videos needed to hold 18, right now 19. Tried right here. Gosh, I wish it just held. And now we're sinking back into our 15. Let's see, as long as it holds 15, 1575, 1575, the most bullish to hold for VIX. So if we can hold that, maybe hopefully we get a little back up in that direction. That would be nice. But breaks underneath there, and we're going to get compressed, and it will be no fun to trade. Anything on the skew? Okay, let's see what happens if this gets back over 150. That will be interesting. Looks, well, from the inverted ZT, it's kind of holding here. Wouldn't be surprised if the Fed does nothing. Just holds it at a quarter. Waits for more data. Still trending down though, so potentially, but I have to look at the federal funds rate. I haven't looked at that. Not the federal funds, excuse me, the plot, the dot plot chart there on the rates, which I have not. Let's take a look at the dollar and yields as we close it off. Okay, let's see. Hold 339.8. We can get into 40s again, but as long as we stay below 40.34, look for this to come down. Still, yeah, might in my opinion, actually, we might see yields just end up kind of traversing around here for a little bit. Dollar making a nice run, still above 98.60. So as long as we hold above that, right? As long as we hang out in this area, no real issues. We'll look to come up and attack these previous equal highs once again. Up and over 99.40. I could hit that $100 point, so we'll see if that ends up happening. And that is all I have for you guys today. Why don't we just take a quick look at, let's take a look at another look at some breadth indicators here. What's going on with RSP? Okay, on the dip, it held where it needed to, so I've got no issues really here with the RSP. Looking okay overall. QQE. Oh, yeah, no real issues there either. Well, actually, let me take another quick look. The only thing I will say is RSP did not make a new all-time high, while SPX and the futures for the SPOOs, ES, did make a new all-time high. So a little divergence there, but it's very close to all-time high. It's very marginal divergence, so I'm not too worried about that one. And let's just take a look, and you know, I probably should start tracking gold as well a little bit on these videos. Good pullback coming up, looking a bit like a bear flag there on gold. So let's see if we can get any type of a base here on gold. I did in fact actually make a purchase in the 370s here for gold on that dip. Let's see if I get rewarded. Let's just take a look. Let's take a look at the cloud here and see what that says, because I am curious as well. Holding on by a thread. Need it back up and over that 380. It was pretty extended, so you know, this still very extended here. I mean, buying it down 360, if we get down there, probably would be a nice purchase. But it's still pretty extended from the cloud, so I really wouldn't be surprised actually if I just have to get out and then reload lower, or this just ends up trying to find some type of sideways action. We'll see if we end up creating, you know, some type of a balanced price range here and we stay above. Then we can have a trade whether we get up and over or out and under. So let's see, we need a little bit more data on gold. All right, guys. Well, that's all I've got for you this week. Thank you so much for joining me. I hope it helped you. Hope everybody's having a great weekend. As I mentioned in the beginning, get ready for an action-packed week. So be smart with your sizing. Remember what we say here at every video: a prepared trader is a profitable trader. Thanks so much for joining me. You've done yourself right, and that little extra effort can be the difference between being a profitable trader or an unprofitable trader. Trade your plan your trades. Wishing everybody a great trading week. I will see you guys out there in the markets. Wishing each and every one of you the best trading week possible. All right, guys, my name is Shark. Don't forget, subscribe to the channel if you have not already. It is free, means a lot to me. Thank you so much, and take care.